Experts give their take on banks and their phenomenal performance in July.
But certainly these higher interest rates are the problems that brought down Silicon Valley Bank. So you may see some more tremors there. I'm just going to stay out of that space.
Right.
Well, I think it's more about the yield curve. I sound like a broken record talking about yield curve inversions, but you have to pay attention to that when you're investing in financials. I am bullish on financials. I do like the sector. And when you look at valuations of banks versus financials at large, they're still very attractive. So if you're a value investor, banks look pretty good. And if you're somebody who's a value investor and you believe that either we'll have a mild recession or skip one altogether, usually in the beginning of a rally after that, you have things like small cap and mid cap value lead out. Financials are a big part of that, so they should do well. That's not to say that we won't have a little pullback in the meantime, though. And as the yield curve uninverts or re-steepens, there could be some pain for this sector. But as it gets back to a normal shape, that's bullish on financials.
Are we close to getting back to normal shape in your mind?
We got a far way to go before that happens, and usually the re-steepening is a painful transition. So I'm not yet ready to say all in, but I do think that long-term financials are a good play here.
All right. So last month, some of the best performers, Zion, KeyBank, those regionals that really gotten beaten up. What's your take on the financials? I want to ask you the same question with the rising interest rates.
Well, the rising interest rates will help net interest income, and that is what was one of the big themes for the quarter across the spectrum. But you're asking me if I like the regionals. I don't. I actually think they're going to lose market share to the big banks, and that's where I have exposure. But I mentioned net interest income was better than expected in the quarters. Expenses were also better than expected, and there were some green shoots in capital markets. And I think that the two most important kind of interviews the CNBC did actually was with James Gorman, the CEO of Morgan Stanley, who actually said that he thought at the time, this is a couple weeks ago, thought at the time capital markets had bottomed 4 to 6 weeks prior. So that's very good for capital markets. That'll help Goldman Sachs as well. I prefer Morgan Stanley because it's diversified with wealth management. The second key takeaway was from the CEO of Schwab, who talked about cash sorting starting to slow.
Right.
That is a good thing. That stock is still down 21%. That trades at a very attractive multiple, so for the industry leader. So I think there were puts and takes in the quarter, Frank. Overall, there were more positives than negatives. Overall, earnings grew 19%, and that's why the group responded and did so well last month. And I think if rates stay here, net interest income will continue to be the positive for these companies.
All right, Josh, as we mentioned, Berkshire and also JP Morgan hitting new 52-week highs. You own both.
Yeah, this has been a year in the financial sector where quality has been rewarded really over pretty much any other consideration. And I think these are probably two out of the top 3 most high quality financial businesses in America. I don't think it's a stretch to say that. And so I'm sticking with them. I've been in these stocks for years and years and years. I'm not going anywhere. I like the fact that they're going up. But even if they weren't, I would probably not change anything that I'm doing.
All right, Steph.
It seems as though people are still nervous to invest in regional banks as there may still be underlying issues. Let me know what you think in the comments below.